Imagine putting in years of work for an 800 credit score. You hop on the Chase website, apply for that Sapphire Preferred, and you get denied. Take a moment. I want you to go grab your denial letter because that's going to be our decoder ring for today. Because that's exactly what happened to my cousin. But if an 800 score isn't good enough, what is? I'm going to let you in on a little secret. Credit scores aren't everything. Don't panic. I'm going to give you some tricks to tip the odds back in your favor regardless of your score, because score does not equal approval. According to the CFPB, a credit score is a prediction of your credit behavior, and FICO's models are used by most of the top lenders. Think of a FICO score as your financial GPA. Typically, scores run 300 to 850, and 800 is exceptional. Think 4.0 GPA. But has your GPA ever gotten you a job? Probably not, especially if you're out of high school or out of college for a while. So let's review some other factors that can affect you behind the scenes. We're going to call all factors that impact credit decisions creditworthiness. On top of credit score, Experian lists 7 additional aspects of creditworthiness. I've grouped them into 3 buckets, but here's a link in the description if you'd like to do a deep dive yourself. 1, your track record. How long have you held a job and paid bills on time? 2, your capacity. How much you earn versus what you owe. And the number 3 is your stability. What you own and where you live. Just like us, banks want low-risk investments. They want to know how they'll make money back when we borrow. Here's a few tips that you can use to get them to trust you more. 1, lenders like consistent and predictable income. Show that you can hold a job and pay your bills over the long term. A grown adult making $60,000 a year for 5 years is more stable than an 18-year-old just out of high school who's made $10,000 a month over summer sales. Sorry, sales guys. So here's a quick tip. Set up autopay for your bills so you never miss a payment and show lenders that you pay on time. You also need the ability to repay debts. For example, a good debt to income for a mortgage is less than 40%. If you make $40,000 a year, that's about $3,300 a month. Your mortgage payments should be $1,300 or less. And it helps if you have more cash flow into your bank than out. So quick check, divide your monthly debts by your income. This gives you a baseline DTI. Now, for the final tip here, I'm going to give a little bit of an annoying personal example. I'm blessed to own my house. I got a good interest rate, but it could have been better. Why? Well, because banks say condos are more risky than standalone homes. You may not be able to control where you live, but you might stay in one place long enough to show some stability. For a pro move, stick with one address for at least 6 months before applying for a big application. Banks want to know who they're lending to, how to get a hold of them, and their ability to repay. Loaning money to a rich friend might seem safe, but if he's always living in other countries, how are you going to get it back? The recurring theme here is risk management. Can you pay your debts? Do you do so consistently? These are questions that banks ask themselves whenever you apply for credit. In my cousin's case, he has a good score, and he looks good according to the other factors we've covered. That leaves one more huge detail that affects approvals: fraud prevention. My cousin applied with a new address and income. Bam, that's a red flag. Imagine getting a text from an unknown number who claims to be your friend. To the bank, it looks like fraud, a stranger applying for a credit card in my cousin's name. Look at exactly what his bank said. Dear Bob, we're concerned someone may be using your personal information fraudulently and declined an application because of this. If the application is valid, please contact us. That first sentence could have cost him a card. Update your own profile before you apply if you move or switch jobs. Fraud prevention is an intricate process, so we won't dive super deep today. However, I will provide some general tips. First of all, complete all sections of your credit application honestly. Be consistent with your information. How can your bank trust you if you apply with a $100,000 salary, but your other bank is telling them that you only make $60,000? Makes sense, right? Simply be aware that sudden or unexplained circumstances can scare lenders. We all like low risk after all. So you've got a denial letter. Now what? Find the section that lists denial reasons. Look for keywords like income, debt-to-income ratio, employment, or in the case of my cousin, fraud. Then you're going to call the numbers on your denial letter. Ask for specifics and next steps. Chase included a number for their fraud specialist. My cousin might call and ask, "Hi, I was denied for possible fraud. Can you confirm exactly which info doesn't match?" And then 3, take action. Had my cousin been a victim of fraud, there were numbers to alert the bureaus and put a freeze on his account. In your case, action might mean setting up small savings cushion if your cash reserves are low, or asking a parent to co-sign if your debt to income is too high for a mortgage. Your banks are outright telling you what you need to fix. Luckily for my cousin, Chase acknowledged that this might not have been fraud. Just to be thorough, I instructed him to update all his personal information with each of his other lenders, whether that's Citi or Wells Fargo. Usually this is very easy to do on your banking mobile app. For a pro tip, do this before you apply to avoid the fraud alerts. This week, my cousin is going to talk to a Chase banker in person. Then, hopefully, he'll end up the proud new owner of one of those heavy metal sapphire preferred cards. Now, we know that there's more to credit approvals than just score. Fraud prevention and appearing low risk are other elements of looking credit worthy. Your challenge: pull your free credit report this week. I'll put a link in the description. Spot one data mismatch and fix it. Post what you found in the comments. I'm Derek at Schoolhouse, where we can help you move from credit myths to credit mastery. See you next time.